And welcome to our first panel of the day entitled Looking Back, Lessons from 10 Years of Green Bonds. As we've heard, there is a revolution in the bond markets that was sparked by the first green bond in 2008. Capital markets have evolved over the last 10 years from a market where investors cared little about what their investments were supporting to one where purpose matters more than ever. This is reflected by the growing variety of green bond issuers from a market dominated by the World Bank and other multilateral institutions to one where issuers range from private companies and banks and utilities to more recently governments. The original premise has expanded too, and current estimates for green and other labelled bonds stand at, I think we've heard already, approximately $500 billion issued in the past 10 years. When adding other issuers that support social projects through bond issuances, such as municipalities and development banks, the number quickly rises to several trillions of dollars a year. And as we've already heard from Heikki and Christopher this morning, the first green bond issued by the World Bank in 2008 created the blueprint for today's market. It defined the criteria for projects eligible for support and sought additional input from recognised climate research institution CICERO. It also regarded impact reporting and transparency as an integral part of that process. So today's discussion will focus on the building blocks that allowed the market to evolve and on the challenges for expanding the market for sustainable investing. As young people care more and more about where their money is invested, and as governments look to new sources of financing for development solutions, what can we learn from the green bond market experience, and what can we harness the evolution in the market to achieving a lasting revolution? The first panel will cover lessons learned from the past 10 years and think about what we could have done differently too. So I'm delighted to say that we have a first-class panel for you this morning to discuss these lessons and perhaps what the future holds. So let's meet them. Why don't we start at the far end? Tommy, introduce yourself, and then we'll work back towards me, and then we'll start.
Toby, thank you. My name is Tom Mercein. I'm from Credit Suisse, and we were a participant in the first transaction. I've been at that firm for 28 years, most of that time running global debt capital markets, and it's a real honor to be here.
Thank you.
My name is Ole-Petter, Langeland, and I work for the second Swedish National Pension Fund, which is in short is AP2. And as you perhaps have heard already today, we were one of the first investors in the first issue.
Yep.
My name is Stuart Kinnersley. I'm a managing partner of Affirmative Investment Management. AIM is a dedicated pure-play impact fixed income fund management company. The reason I'm on this platform is because back in 2009, 2010, in a previous role as Chief Investment Officer, I helped set up the world's first green bond fund in collaboration with World Bank and Heikki and George and everyone else. So.
Okay.
Christopher Flensborg, ECB.
We heard from you earlier, so yeah. Yep. Christa.
Everyone knows Christopher. I'm Christa Clapp at CICERO. I'm a research director for climate finance there, and we're not a financial institution, but we provide the independent reviews on the greenness of bonds.
Great, thank you very much. So we're going to start off with some questions from me to the panelists, and then once we're sort of done with those, there should be some time to get some questions from the audience. So do use this opportunity if you can to think up some tough questions, if you can. But let's start with some initial perspectives from each panelist, and I'd like to start with Ole-Petter. So as an investor in the first World Bank green bond, tell us what you and other investors were looking for when you approached SEB. Tell us about the journey you've been on since then from your perspective.
First of all, I have to thank for the fantastic video you showed here earlier, Heikki, because that more or less were the answer to all the questions. Because that was the other investors that participated in this issue. And to be honest, we knew what we wanted to. We had a large portion of fixed income assets, and fixed income assets used to be seen as a capital preserver and a diversifier in the portfolio. And we wanted to add some purpose and impact to those functions. So we knew what we wanted, but we didn't really know how. So when we first started the discussions with Christopher and Class about how to find a solution where we can earmark the proceeds to investments that hinder climate change, we thought it was a brilliant idea, and then it took like 12, 14 months from where we started to discuss it before we came to the first issuance. And at that time, we had Lehman Brothers, we had Bear Stearns, we had a global financial crisis. So the eager to change things within our fund was perhaps not at the top. But on the other side, it felt very good that we had something meaningful to work towards. Not just sit and look at the volatility in the financial market, but try to find investments where we can make a change, make an impact. And of course, we wanted to have a clean instrument, a pure, straightforward bond. No project risk, because we are not capable of evaluating those. So when we then had Christopher presented World Bank as an issuer, and we knew World Bank as an issuer since previous, we knew their capacity and capability to handle the projects. And at that time also included CICERO to connect science with the financial market to get a second opinion. So we really knew that what we invested in would make a change, that it wasn't a hoax. That just solved all our problems. It was very easy for us, even though it was very turbulent, just come to the board and say, this is what we want to do. It's a new instrument, it's a new thing, but we think it's the future. And from there it went.
Thank you. Christa, why don't you take us back to when CICERO got involved in the process and how you've become the trusted source for climate knowledge for the financial markets. You said that communication and vocabulary around climate risk as financial risks has been a key part of the value of green bonds.
Yeah. Well, when I introduced myself, I said that I'm not from a financial institution, and I think that's part of the answer. When Christopher first called up my colleagues 10 years ago, or a little bit prior, to ask us to do the review, at that time, CICERO had never done anything like it. In fact, most of the work we do is either for other researchers or for the IPCC or for policymakers. So this was the first time we were connecting with financial decision makers, which is a really important piece of the puzzle. When I talked to my colleague Knut, who took that phone call, he thought, well, this could be interesting. Why not? And I think that attitude was really important, because we could have easily said, no, we don't know what we're getting into. But fortunately, we stuck our little necks out of our turtle shell and said, okay, we can talk to people that are not researchers. Let's find a way to communicate. But of course, we didn't know where that was going. And in fact, I think I explained some of the motivation for sticking our necks out was really, here's a chance to communicate research to a different audience than we were used to working with, and potentially very powerful audience to reach the climate change challenge. So if we can better communicate and apply what we're doing on the science side, and we are able to help facilitate decisions towards a greener direction and capital flowing in the right direction, then we're doing our little tiny part. But of course, there's challenges with that too. And some of the challenges that we faced from the beginning and have needed to adapt over the years is, well, whatever we are doing, we need to do faster. So we're used to doing 3-year-long research projects and digging into all the details. And we had to be able to respond within a few weeks' time, and not only quickly, but very succinctly. And on the first page, if an investor is only reading the first page, what do we want to tell them about the climate risks or the strengths and weaknesses? And then after some years of doing that, we had another challenge. Well, how do we compare across the bonds? Can't you do something more quantified? And this is a real challenge when we're working with a lot of qualitative information, and some of it is quite subjective. And so we have to shift and understand how to do a risk framing, and we came up with our rating system of light, medium, and dark green. And that's actually been really useful to apply to other research as well, not just for the bonds.
Thank you. Tommy, how did Credit Suisse get on that first bond?
Had to do some digging. No, I'm going to channel my mother and 2 of my sisters that are teachers. There are students in the crowd, right? Show of hands. Can anybody say, he took a little bit, What besides the first green bond, what happened 10 years ago in the financial markets? The crisis, right? Well, Credit Suisse at that point in time, it was a very tumultuous period. And as we were very lucky, in retrospect, at the time we told everyone it was skill, but to not have been severely impacted by the episodes of Lehman and Bear Stearns. And we were the only bank at the time that didn't take any capital from any government in the form of liquidity or equity. And as a consequence, we were being viewed by the market as a stable, safe set of hands. And it was a scary time because even if you thought the person you were lending money to was solvent, you didn't know if their clients had the money. And so as a consequence, I think, through years of coverage of SC Bank and the World Bank, we were invited to be a swap counterparty in the transaction because, as you may or may not know, if his fund wants to put money out in one form, generally the World Bank might not want that money in the same form. So it needs to be transformed, whether it's via currency or fixed rate to floating rate, in the form of swaps to get the two parties to get to what they want to do. And I think at that point in time, we were again viewed as someone who was financially stable. We had the ability to structure and execute the transaction. And so as being a part of the transaction from the swap counterparty perspective, we also were able to be included in the transaction as an underwriter. And I think, it's interesting. So that kind of came about. And then we look today where we are, without getting too far ahead. Now we have an entire Office of Sustainability with fully staffed with 10 or 15 people that reports directly to our CEO. So you think about how necessity being the mother of invention, that was definitely the case with respect to Credit Suisse.
Thank you. Christopher, we've heard a bit from you already today, of course, but what did that first phone call to the World Bank change for SEB?
It changed quite a bit. I've been an investment banker for 30 years. And basically what we are trained in, that is searching alpha, that's searching results or financial results. So basically, normally what we would do, that is to identify the best risk-adjusted return. That's what our clients are asking us to do. And before I answer what it brought, I would like to go a little bit forward in the 10 years. So over the periods where I've been traveling an enormous amount of time, together with Heike and together with Heike's colleagues, we have gotten an insight to how to build societies. So the infrastructure of the World Bank, the competence of the colleagues from the World Bank, the experience of company or institutions like CICERO is basically been helping me to understand the sustainability of building infrastructures. And what we have done over the last 20 years inside finance, that is that we have been going into a quarterly economy, which is destroying. We're basically promoting short-term consumption rather than long-term resource efficiency. And I think that the first phone call and the following years, all the traveling with the World Bank, all the insight to the knowledge and experience of the World Bank on how to build societies have helped SEB, not only me, but SEB to understand how we as a financial institution need to go a little bit longer in our assessments to be capable of understand how resources are being used and how to create long-term gains and price that today. So I think that call changed our way of assessing the work we're doing. It changed the work that we're working together with our clients on all sides, both investor and issuers. And it also made us extremely humble in respect to how much we can actually learn from our collaboration partners. I think that's what it changed.
Thank you. Stuart, you've said that green bonds changed your life. Is that true? How did that happen?
I think that's just half the story. Some of my colleagues here have referred back to 2008, and this is when the global financial crisis was beginning to kick off. And I think those two subsequent years led me to think, actually, the financial system is part of the problem we face. It is implicit. If you think about it, every investment you make has an impact. Unfortunately, you could argue in the post-war period, many of those impacts were very negative, be it greenhouse gas emission, be it tobacco, be it whatever. But in terms of investors, we very looked at things in a very two-dimensional kind of lens, risk-return, adjusted returns. But we weren't looking at the underlying consequence of many of those investments. So the global financial crisis, to me, kind of crystallized that there was too much emphasis on short-term shareholder value at the expense of broader stakeholders, which Christopher was just alluding to. And also the fact that actually we were financing many of these negative externalities, which we are now, paying the price of. So that was one side, and that was quite depressing, kind of going through that kind of personal reflection. And then, fortunately for me, it's great to kind of diagnose a problem, but if you don't have a solution, it doesn't really help. And then at the same time, we had the World Bank issuing green bonds, and I was really fortuitous that I had a relationship in my previous role with collaborating with the World Bank on a project. And when I heard in 2009 about the issuance of green bonds, I went to George and Ken and others at the World Bank and said, why don't we put this into a mainstream portfolio that, focusing on this slither of the bond market and demonstrate that mainstream investors can invest for return, but also look at broader consequences so that you're not compromising your fiduciary responsibility. And I think that whole experience of doing that at NICO and being able to demonstrate that you don't compromise financial return by focusing on a small slither of the bond market led me ultimately to set up with a former colleague of mine, Stephen Fitzgerald, a dedicated fixed income impact asset management company. I want to be disruptive to financial markets, and I think this is a way of demonstrating and being able to do that. So green bonds enabled me to do that.
And change your life.
Yeah, it has. But I'm hoping it's going to change all of our lives.
Yeah.
Actually, I will add into this, and this is something we are seeing at the bank. So basically the whole bank, the whole SAP is now turning into sustainability, and every single colleague is proud of being capable of explaining how they contribute to societies. So it's a very, very important point.
So this is I guess, and this is what the panel is for, is the lessons of the green bond, and Christopher, you're touching on it here. This is one of the positive lessons of the green bond, in that it's brought awareness within capital markets, but perhaps more importantly outside of capital markets. Tommy?
As I'm listening to people talk, I'm just thinking to myself, first of all, I would tell you that my personal view is the potential of this product and this thought process is dramatically untapped. I mean, for all the green bonds that are issued, there's still so many, the markets are so much bigger than the size of what's been done to date. So I think this type of thinking is critical. And when I think about what we do as banks and the word leverage, what does leverage do? It magnifies, an initial impetus and makes it bigger. So therefore, the efforts towards putting leverage towards good decisions and sustainability is really going to be critical to driving the future. And I think some of the things that Patrick said were very, very spot on in terms of the non-financial parts of what people are doing. We need to put them in the light, we need to analyze them, and we need to hold people accountable to them, because that in and of itself will drive the behavior that we're looking for. And I believe that debt and finance broadly will either slow it down or speed it up by the nature of what we do. And so therefore, that's, as I listen to you guys talk, that's exactly what I'm thinking. And I think we're at a point, especially demographically, where it's what our clients care about. And so therefore, now I think the time is really going to pick up. All this ESG and sustainability is becoming the mainstream, which wouldn't have happened if it wasn't for this. And I think that the non-mainstream will be, why aren't you doing these things?
Christa.
Just picking up on what you see is sometimes the internal institutional change and the potential for this. I could tell you an anecdote about one of the first times we had a phone call with an issuer when we were doing our review process. And we asked a bunch of questions about project selection and how the projects are measured and what types of projects, so we can get an understanding of the potential impacts. And rather naively, I guess, I was really shocked that the CFO and the sustainability officer had never met before. They didn't even know each other's names. And that wasn't the first time. I can't tell you how many times that has occurred. And the fact that they are sitting in the same room and need to discuss how are we selecting projects, not only the financial returns, but how is sustainability linked. I think that's It's a really powerful tool for internal capacity change that I think can have a lot of ramifications externally too. And it's not the financial part, it's this awareness and capacity building and integration in institutions that's important.
So, Ole-Petter, awareness, do you think is the big positive lesson from this?
Definitely, that's one of the biggest positive implications of this, and also awareness among the public, but also awareness for investors. Of course, we demand our issuers to provide us impact reporting. We get tons of reports of what projects have been financed, what's the CO2 emission cut due to that. And then we sit there and see, oh, we have a ton of information. How can we reuse that and give that information to our beneficiaries? So actually, we at AP2 have made this little pamphlets that also describes the first 10 years of our investments in green bonds, and try to be able to use all the impact reports that we have and drill that down to certain countries so that people can really go in and see this is where your money actually is ending up.
Yeah, this morning I was trying to kind of think an anecdote of what the green bond and how that is changed from previous to green bonds being issued. And I apologize because there's probably a lot in the audience younger than me who didn't relive or go through that process when you switch from black and white television to color television.
A few years ago.
Yeah, I apologize. And in many ways, I see the bond market being like, the black and white television. It was a bit bland. It was a bit it was fuzzy. It wasn't very clear. Very, very two-dimensional. And then you compare to what's happened to the green bond market and how that's influencing the wider market. Is you look at the 3D color TVs, the clarity, the transparency, it really brings the world into people's homes. It's a real image, it's tangible, and you can understand the world. And in many ways, that's how I see green bonds. I mean, the colors obviously connected, but in terms of really hitting home where your investments and what they're doing, and we've had a lot of focus on impact reporting, and I think that is the third dimension. This is the 3D element that investors or the end clients can understand exactly where the money's going and the impact from that. So, I apologize, it's a very simplified anecdote or analogy, but I think it is quite illustrative of the change.
I'm happy to say that I'm one of those youngers. I don't remember. No, I think that what is a big change for me, that is, I think what is a little bit shocking, that is the word additionality. So what does additionality actually mean? So when you go to Mindy and her colleagues, it often means that you go down to the impact. How many lives did we save? How much CO2 did we take away? And there's, in the NGO society and in the impact investment field, there is a need to actually understand we want to see the change. However, we will never get there without people. So the first step to get to the impact, to the measurement, is to raise awareness. And one of the changes that the Green Bond in my world have been doing, that is, it has been creating a dialogue. It has been engaging the financial society. It has been enabling the financial society. And that means that the additionality is that it's mobilizing human capital and the financial infrastructure to understand these challenges and start dealing with them. And I'll give you one example of that. So on the tours we've been with the World Bank, there have been explained many projects. And one of the beautiful projects we have been seeing is replacement of refrigerators down in Mexico City. And it sounds pretty simple, but actually what happened there was that the population, the poor population of Mexico City was offered to replace their refrigerators with a new one, brand new one, and get $2 a month, or I don't know if it's $1 or $2, but get a small amount each month for replacing it. So they didn't only get a new refrigerator, they also got money each month. And the way that was done, that was because the old refrigerator was so polluting, so it consumed so much energy, so the savings in energy was sufficient to pay for the replacement and pay money to the people that did it. And this is just one example of billions of examples of misconsumption that is in our society. And if we as finance start working on models which basically create off-balance sheet solutions, because that's what this is, to improve efficiency and start thinking, then we can move to a revolution. And I think that additionality word need to be a key of what we are talking about, and very, very transparent, talking across sectors, across mandates, to make sure that we don't misunderstand each other in that context.
So, okay, so we're all agreed that awareness is absolutely a key positive of green bonds. What else has been a positive of green bonds? Christa?
I have to bring up the Swedish example. So no, I haven't been brainwashed just by living in Norway. That Sweden sets a good example, but I really think there's something important going on there that deserves more study and consideration for replication. So we had a lot of really important actors in Sweden that pushed things along, and the result that we see now from the reviewer standpoint is that we see issuers in Sweden sort of scrambling over each other to get a better green rating, or to be the first one to issue in their sector. And we don't see that a lot of other places, but one example is the Swedish municipalities. They are calling us and saying, how can we improve how green we are? What can we do next time? The neighboring municipality got a dark green. How can we get that? Because our citizens are asking about that. And that's fantastic. If we could find how to replicate some of those motivators in the Swedish market, and do that in other countries, and we're not there yet, but that would be a revolution. Yeah.
One of the things that Christa said that was interesting was, I bet you the CFO and the head of sustainability, who never met before, they both went home that night, or even the week before, and talked to their kids about climate change and what was going on. So everybody cares about it, but it cuts across disciplines, and it's, you know, even in an institution like this, it can be somebody's third most important thing in a day when they can only focus on two things. And what's really critical is to continue to drive these sort of cross-disciplinary conversations. And, you know, the power of the nudge, which is kind of what you're saying, is really important too. You know, you can get a lot more things done, voter registration, whatever, by just putting up a sign saying 70% of the people in your town voted, did you? As opposed to saying, go vote, go vote, go vote. So I think what's really important is, as you keep fostering these dialogues across disciplines, what you get is you get a sense of where the inertia builds upon itself, and then we need to get to that tipping point where the switch is flipped, and it's not, what am I doing that's green? It's, why am I doing things that aren't green? And I will tell you that it's on everybody's mind, and just from the trenches, there's 25 G-SIFI banks, and the 25 biggest banks in the world. So you can imagine getting a meeting as a banker with an important client. Sometimes it's easy, sometimes it's not. If you can bring a client an intelligent conversation about their sustainability footprint, or their carbon footprint, or how to own the narrative better, you can get a meeting with anybody you want. Because there are huge companies that still are working through this, but don't know yet exactly how they're supposed to build that bridge from, you know, unclean to clean, and we need to be facilitating those conversations and financing them. And I think if you do that, the problem, it won't take care of itself, but that leverage will compound, and the power of compounding is tremendous. And I think, you know, we just need to keep evangelizing on the topic.
We have found, because we engage with a lot of issuers before they issue green bonds, and we have found that going through that process has led to many of those institutions, many of those issuers actually looking at their own procedures and actually changing them as a result of issuing the green bond. I think that's actually
but what, I mean, I was going to ask you, and actually maybe Ole-Petter as well, but anyone welcome to join in on this. But one of the hallmarks, I think, of the green bond market is the collaboration that we see between issuers, banks, and investors. Has that rubbed off into other areas, do you think?
I think I mean, we've heard this morning about, you know, the collaboration between SEB, AP2, World Bank. I think the nature of the market has, and eventually leading to the green bond principles, the whole nature of the market and how it's evolved has been based on that type of collaboration.
Toby, sorry. Peter tells me he has a question. Can we open it up to the floor?
Yes, sure.
Yeah?
Yep, okay. Peter, wherever you are, yeah.
Oh, I don't really want to interrupt this conversation, but first of all, thanks to the World Bank and SEB for arranging this moment, which is really meant to be a springboard to the next 10 years. But sort of before we ran out of time here and reached our coffee break, I was looking at the sort of the title of this session of what we've learned for the last 10 years. And this panel has covered a lot of really important things. And there's one that occurred to me that hasn't been mentioned. And if you'll give me 30 seconds to keep you in suspense, you're all here today because you've been part of this journey. And it makes you sort of part of the inner circle of green bonds. It also makes you the ambassadors for green bonds and green finance. And one of the real lessons that we have learned in the last 10 years, and I can pick many of them, but one important one is you gotta start somewhere. And, you know, in the room here, we have like the perfect example. I remember taking a call not long after we finished our statement of investor expectations from Fannie Mae, and they had an idea. And what that idea has become in the last several years is they took the risk, they did a pilot project. Take that message out to the people that you speak to when you leave here today. You don't have to begin big, you have to begin somewhere. And what Fannie Mae has done is a real example of the power of action. So that's my comment on. I lied, Heike.
Okay, so that was Peter Ellsworth from Ceres. Okay.
Thank you for your non-question. Do we have actually any questions from the audience? Any real questions out there? Gentleman, second row. Lady, sorry, it's a lady.
Suzanne Bishop.
Cool.
Thank you, Heike, Christopher, and thank you, Christopher, for introducing me in 2008 to the green bond, which I did buy for the United Nations Joint Staff Pension Fund. And it solved so many problems because I wanted to do something green and sustainable, but it was the first time I could prove my fiduciary duty in so doing. So thank you for that. But my question now is, 10 years later, the concept and problem that I'm hearing from public sector investors is, what about liquidity? These things people buy and they never want to give them up, which prevents the market liquidity that we need for our short-term portfolios. Is there a better way to make more uniform definitions of what is green so that there might be a better way to create liquidity in this market? What can we do to make these things more liquid?
I mean,
What about Tommy first?
The simple answer is issue more of them.
Yeah.
Very simple, right? I mean, investors will do ultimately what they got to do. I think, but you're seeing like important initiatives like Bloomberg puts sustainability ratings up on their screens. The more, to Patrick's point, the more that the metrics that are non-purely financial are incorporated into the fundamental identifiers of the bond, what you want ultimately is when you go to sell something, when the trader or the salesman hits the ticker or whatever, it pops up as a green bond. And then all of a sudden they know, okay, I'm going to show this to my green investors first. And then they're going to buy. So more bonds will do that, but also, again, it's that cross-division. Make sure that IT has the ability to flag your positions. Make sure that your dealers have the ability to recognize that you're selling a green bond. Make sure that, you know, so go to the dealer who is the most active socially and give them the situation to work on. Just all those things will condition behavior to the point where you'll get the liquidity. But by definition, any growing market, is going to have bouts of illiquidity. It's a broader topic, but there's liquidity problems in the market as a whole.
Thank you. Sorry, we got about 2 minutes left, so I'm going to try and get Christopher. Sorry.
Yeah, can I just take, so it's a real problem. So asset owners normally hold the bonds, asset managers can't get liquidity when they get the flow. So that's a big challenge. So I think that what you're seeing that is that all issuers want to be certain that they're doing the right thing. So there's a competition about having a dark green from CICERO or comparable. And that, I think that is a fear that we're stepping wrong. This is new for most finance people. And I think what we're beginning to see now that is that people are more comfortable in going to medium and light green, which is equally important to the dark green. But now when we know what we're talking about, we're actually willing to include that, meaning that the market will grow. And that's extremely important. If we don't segment the dark to the light, but say this is all and important of this transition, then you'll get that liquidity.
Thank you, Christopher. Christa?
Yeah, just briefly, because we're talking about standards now and liquidity, and I'm not sure that standards are the answer to increased liquidity. But because I work on closer to the standard side, I do want to say that there are efforts going on towards standardization in certain regions, the EU in particular. But I want to reflect a bit of caution too, because something that we've learned in the last 10 years is that every green bond we review is a little bit different. And that's actually a benefit. We've seen some really creative solutions. So one great example is Vasakronan, the first corporate issuer in the market, I think in 2013 perhaps. It's a Swedish real estate company. And what they do on buildings is not just look at energy efficiency, but they're also looking at resiliency aspects. They're looking at where they are located towards public transportation. So it doesn't fit in this standard, one metric thing. What they're doing is much more holistic, and we want to be able to highlight that as well. At the same time, we can move towards a common language, but allow for some of this creativity.
Ole-Petter.
I think the way the market is evolving, just think about when we started. There was a official institution that issued and a long-term investors pension fund that bought, and they basically kept the bonds for almost all the duration of it. Now you've seen a variety of different issuers, a lot of corporate bonds. You see government start, you see covered bonds. So you have a lot broader market, and at the same time, I think also that you get different type of investors into the market that perhaps are not there for sitting with a bond for the whole duration of it. So I think that just the fact that the market is growing and widening will, at some stage, provide better liquidity.
10 seconds, Stuart, and that's it.
Liquidity is improving dramatically. We have funds that offer daily liquidity, redemption, subscriptions. There's an active secondary market. We put $200 million into the market within 7 days with the launch of the Lombard Odier Climate Bond Fund. So it's improving. It's very different from a few years ago.
I'll leave you with one hopeful comment. We underwrote about a couple $2 billion of green bonds for ING the other day. And as a euro tranche and a dollar tranche. And some of the clients that bought it, the book was well oversubscribed. We probably 300 or 400 accounts in the book. Wouldn't tell us if they were putting them into their green funds or not. That's a good sign, because they didn't want to disclose how far along they were with respect to getting into the green financing. So the fact that investors are starting to hoard that information as a competitive advantage is a very healthy sign for the market.
Well, thank you. We have run out of time.